What's up, everyone? Good morning. Yeah, I realized it didn't have any sound. Should be all. Day is April the 8th. As you can see, massive with the peace deal that we had we'll kind of talk about that, but we had some news here in the overnight session. And as you can see, markets gapping up huge here. ES up huge. Yeah, NQ up as well. And we have a bunch of other names. So basically, markets are rallying back towards the upside. Am I cutting in and out? If I'm cutting in and out, try and refresh the stream. It should be all set. If it's not, I might have to restart my microphone or restart the stream here. But it should be all good. What's up, everyone? Good morning. Better now? Okay, awesome. All right, what's up, everyone? Good morning. Before we head on session. Good morning, Victor. Good morning, P1. Good morning, Andy, Maria, B Roots, Robert. What's up, Hosman, Cosmic, Lamit. Good morning, Martin. Good morning, Gerald, Marcus, Cody. Good morning, Robert, Kyle, Deuce, Knight, Andrea, Sam, John, Julius, Francisco, Stefan. Yeah, what's up, everyone? Good morning. Hope you guys are doing well. Yeah, markets definitely huge rally. We'll kind of talk about this here in a second. IV is going to be pretty high. Joined your WAP yesterday, but having some issues. If you're having some issues, Peter, make sure to open up, or you can message the WAP support and someone will help you out. But yeah, with that being said, is the mic actually crackling bad? If that's the case, try and refresh the stream. It should be good on my end. Just crunchy sound, cracky sound now. Can you guys type in the chat if the mic is fine? Before I proceed, let me pull this up here as well. Yes, after refreshing it worked. Okay. Awesome. Just reload the page. Everything should be good. But okay, let's go on to the news events that we had. Actually, the main thing, let's kind of talk about what we had yesterday. So, as you can see, what we had was basically the prime minister that we had from Pakistan. He basically proposed a deal that he wanted to extend it for another 2 weeks. And as you can see, Trump basically agreed to that. So huge market rally back towards the upside, basically entailing that the war is most likely going to come to an end fairly soon. So we're going to probably end up having that peace deal by the end of 2 weeks. Of course, anything can happen. And there's always some sort of news that has been dropped. And we always get more kind of developing information. But with overall markets, right, suspending it another 2 weeks, there's a good chance now, right, the war is most likely going to be officially over. So with Trump, as I mentioned, agreeing to suspend the bombing and attack of Iran for a period of 2 weeks, right, he was kind of mentioning something earlier, but of course he kind of went back on it. And now you can see the markets are rallying back towards the upside. Major red folder news events that we have coming into market open. What we do have is the FOMC minutes today. Of course, that is not really going to affect the market as much. The main thing that we have ongoing is the war news. And as you can see, we're up about 3%, I think 4% here on the NASDAQ as well. And of course, tomorrow we have some more red folder news. We'll kind of talk about this tomorrow as well, which is the core PCE price index and the final GDP. And of course, on Friday, we have the core CPE as well. Yeah, if the mic isn't fine, make sure to... Okay, should be back here now. Maybe it's on my side. Yeah, a lot of times it's on YouTube, so try and reset the stream. Refresh the stream, and it should be all good. Mic is... I reset my mic, so it should be fine. If it's not, try and refresh the stream. If not, I don't think I can do too much else. Should be good now. But let's go on to the charts and what we have coming into market open. coming through clean now. Should be, yeah, I'm not sure. That's kind of weird. I didn't really do anything, but I guess the mic's potentially fixed here now. It's fine. Good now. Okay, awesome. All right, let's start off on the major indices. So let's talk about the ES, NQ, SPY, and Qs here as well. So let's kind of talk about this. So for the overall markets, pushing down in towards the key levels. Last week, we had some buyers step in. And as of course, you can see this week here as well, kind of pushed towards the downside. But overall now, we're about to have a huge gap up in the markets, back up really in towards that 680. So as you can see here for the overall markets, weekly time frame pushing back in towards key levels. Now we're about to come back in towards our period of consolidation that we have, which is at 680. So we're going to have a pretty big gap up in towards this level. So gapping up in towards this 680, really the next level that we have is of course going to be that all-time highs. But right now we're essentially back inside the consolidation in the original level which we broke down from, which was that original war news. So overall the markets was dropping before the war news, and of course once we had the war news, that's when we ended up having that original push towards the downside. Now with the overall markets back up in towards the original consolidation that we had with the war, what we're going to keep an eye out on is this 680. So this is what we have on the weekly time frame. As I mentioned, we're gonna have a huge gap up. If we go back onto the daily time frame here on the SPY, you can see period of consolidation. This is when we had that original war news towards the downside. As you can see, we kind of had a couple of gap downs, and of course, as it was developing, we end up dropping towards the downside. Now we're just kind of right back in towards this general area, which is this 675 along with this 680. So we have a pretty solid gap up here in the overall markets, up about 2.7% here on the SPY chart here in the pre-market. Really for the really for the next levels on the SPY chart, we actually have a couple scenarios that we can be looking for. So for the SPY, as you can see, fairly bullish here, huge gap up in the markets. Now moving forward on the SPY, we're number one going to mark out that one gap that we have created. But basically now with this huge gap up in the market, really the next level that we have is actually all the way back up in towards our all-time highs. So for the SPY, really next level here is going to be that 680 plus kind of a trade back up in towards the all-time highs. You can see lower highs, of course, were being built. As soon as we flip back above, of course, with news here as well, above that 660, you can see huge rally back towards the upside. And now we're back in towards this 675. So pretty big gap up in the markets. Next levels, of course, is going to be all the way back up in towards our all-time highs, 695 here on the SPY. Of course, with this gap up, we are going to have this gap back towards the downside. What is the likely scenario now that we can get this potential kind of gap fill reversal and we push back down in towards that 660, which is the real question. So for the overall markets here, SPY, as I mentioned, right back up in towards key levels. If you go back onto the lower time frames, or if you have any significant levels drawn out, the major levels they can have drawn out really is going to be this 675, which is, as I mentioned, the area that essentially we broke down from. So for the SPY, moving forward, now, as I mentioned, we have this huge gap, right? What are the likely chances that we break underneath that 676, retest, and we end up having that gap fill back towards the downside? Right, so we have a huge gap in the overall markets. Of course, we have this major news event that's pushing it higher, right? We now have this gap fill back towards the downside, right? Is this gap fill likely in the overall markets? Really what we're going to have to pay attention to is really the next news event that we do have, of course, which most likely will be in about 2 weeks with the peace deal. But next really news catalyst that we do have is the war officially going to end, right? There's a very good chance the war is likely over, but the next news event is going to officially be when the war ends, and then we have, right, that rally back up and towards our all-time highs. The key levels that we are going to mark out, of course, as I mentioned, is going to be that 676, and we're going to really have to take it day by day. But the next news event, if there's any sort of change that goes on or any bombshells that kind of drop, this can kind of move the price back towards the downside. But overall, if you're looking at the SPY and Qs just based off of market structure, just based off of sentiment here, right? Now we're back above key levels. Really, for me, the main level that we did have, of course, was that 660. That was the line in the sand for me yesterday. Underneath that 660, we can see that push towards the downside. Above our 660, of course, we can see that push back up and towards that news candle high, which was that original war news that we had. So this was the original war news that we had a couple weeks ago where price rallied towards the upside. Of course, we failed to make a lower high, and then we ended up continuing towards the downside. And then, right, markets rallied back towards the upside, of course, here now, and we're above very much key levels, right? 660 above that 668. And now we're essentially back into that original area that I talked about, which we had that war news that originally dropped price towards the downside. So next levels that we do have on the charts, now we can just kind of mark out that 680 along with that 685. But for the SPY moving forward, at least coming into today, right, we're not, of course, going to be looking for this gap fill reversal, right? After news like this, up about 2.7%, right? If we are eventually going to come fill this gap, right, it's not going to fill the gap on day number 1 or day number 2, since this is such a huge gap in the markets. It would take at least a couple days in order for it even to even think about filling the gap back towards the downside, right? There's a better chance we just kind of consolidate any major dip, be bought up, and then of course, if there's any sort of news event that we do have, we could take this back towards the downside. But with everything, with the major news event really that's out of the way, which we had up about 2% here in the pre-market, we're now most likely just kind of consolidate in this general area and slowly move back towards the upside. In this case, the next level here is going to be that 678 along with that 680 here on the higher time frame. So at least for today, right, let's kind of talk about the game plan coming into market open here on SPY along with the QQQ. Number one, what we have to keep in mind, right, huge major gap in the markets, right? As of recent, what we've had, as I've talked about, is these huge move in the overnight sessions or even later into the day. The New York session has been fairly difficult to trade just because we have these huge moves. As you can see, another huge gap in the markets. So now what I want to see moving forward, right, though essentially the war, not the war is prolonged, but now we have an extra 2 weeks in the overall markets. We should see, right, less action in the overnight session along with the pre-market, and we should go back to more of like a normal market here where we have the New York session, which is of course the most volatile, and then we could be looking for more trading opportunities within, right, 9:30 to 11 a.m. every single day. At least for today in the market open, right, it's going to be a little bit more of a difficult morning session just because, as I mentioned, huge gap up in the markets. We're very far away from the levels that we have marked out this week. So our previous day highs all the way back down in towards our 658, and now prices all the way back up in towards that 676. So we're going to have to base it off of intraday price action along with some of the levels that we have marked out, which is all the way back left. So other levels that we can have marked out here is just going to be these old daily highs. So for this SPY coming into market open, if we do want to see any sort of, right, continuation back towards the upside, right, I would like to see kind of a major dip in order to try and go long towards the upside. Just because we have such a big move, right, it's going to be very difficult if SPY just continues higher, right? Longing after a huge move in towards the upside is going to be fairly difficult. I'd much rather see some sort of pullback in the markets if we do want to push higher. Plus the IV is going to be elevated here as well. So for the SPY coming to market open, the key levels that I have marked out is going to be this 675. This is our after hours highs. Also a key level here on the higher time frames. So a couple scenarios that we can have marked out on the SPY. Scenario number one is going to be above our pre-market highs for continuation. As I mentioned, not necessarily like this setup, but overall market is fairly bullish, right? Above our pre-market highs, we can see a push up and towards that 681 here. As for another scenario, if we can get that dip, you can get that push back up and towards that 678, right? We can be looking for some sort of higher low here on the SPY for a pushback towards the upside here as well. And then, of course, if we have a little bit of a bigger pullback, you can be looking for some sort of kind of reclaim setup for a pushback up in towards that pre-market highs here and above on the SPY coming into market open. So the levels that I have marked out is going to be this 675. If you go back onto the daily time frame, as I mentioned, these are the levels you're going to have to mark out, is levels all the way back left. Other levels now I'm going to have marked out is actually just going to be this high back here, which is going to be this 672. So we can use that 675 as a reference point this morning, and then we can also mark out this 672 here as well. As I mentioned, I am, of course, leaning more towards the upside. Shorts are going to be very difficult unless you're purely looking for scalps, right? Don't look for that gap fill reversal, at least coming to market open, maybe later into the day, or of course we have any sort of news event, but at least right off the bat, you're going to be looking for some sort of dip to take this back towards the upside here on SPY, right? Shorts would work out potentially later into the day, or you had some sort of like pre-market high rejection. You can look to fade this back down and towards that 675, or if price like kind of grinded up for the morning session, you can look to kind of fade it down off the 681 for a push back down in towards that 675. If we look onto the ES chart, let's go into the higher time frames here as well. Another one where, as you can see, we broke back above key levels. So the main thing that we had here on the ES along with the SPY in this case was our 6650, multiple touches here, very key pivot level yesterday and of course the week before. Once we broke above, you can see strong pushback towards the upside. Of course, we had some news as well, pushing this back all the way up and towards our previous level of support now turned into resistance. And now we like to see the reaction that we have off this level here again. So for the ES key levels that we are going to have marked out, if we go into the hourly time frame, what we're going to have marked out here is just this key pivot high, which happens to be that 6,800. We can drag this over. Other levels that we have marked out here now as well, if you go onto the daily chart, can be all the way back up in towards this high that we have created, which is that now it's going to be that 6,900. So for the ES coming into market open, key levels that we do have marked out is going to be that 6,800. If you do want to see any sort of continuation higher, right, bounce play here, dip and rip coming into market open for that push back up in towards our pre-market highs for any sort of continuation back towards the upside. Another possible scenario above our pre-market highs, as I mentioned, for that push back towards the upside here as well. Only way you're interested in shorts is going to be some sort of miniature scalp that you have, either just kind of this pre-market high rejection for push down in towards that 6,800. Shorts are in play underneath this level, but I'd be very cautious looking for any shorts coming to market open. There's a very good chance if price does push lower, this could be a trap, and you could be looking for that reclaim setup back above that 6,800 for that push back towards the upside. Okay. Now let's go on to the NQ chart. Let's go into the higher time frames here as well. So let's kind of talk about the NQ along with the QQQ here. So based off the weekly time frame, as you can see, we end up having that push towards the downside, some buyers stepping in last week. And of course, now we're actually breaking back above and we're pushing back up inside this consolidation here. So another big gap up here on the daily time frame. And as you can see here for the Qs, we had this original consolidation. This is the consolidation that we had during February and earlier of March here as well, broke underneath it, and we end up having this retest for continuation towards the downside. Levels that we had moving forward on the Qs was that 590. If we broke above, you can see this mean reversion, another rejection. We could see that continue pushback towards the downside here. So for the Qs, now coming into market open and moving forward, breaking back above this consolidation, the next level that we do have is going to be this high that we have, which is that 620 on the higher time frame. So what I would like to see here for the Qs is that pushback towards the upside. And as you can see here, Qs is fairly bullish. We'll kind of talk about the SMH, which is almost back up and towards our all-time highs. That, of course, is leading the markets higher. But as for the Qs, the key levels that we can have marked out here now is going to be number one, that 610 or that 612 all the way back from March of earlier this year. And then other levels that we can have marked out here now as well is going to be that 616. So these are the levels that we have coming into market open. We are above that currently here in the pre-market. Other levels that we can have drawn out is just going to be these old highs as well. So for the Qs coming into market open, key levels that we have marked out can be that 612 along with that 606. Fairly similar here to the SPY chart. As you can see, huge gap up in the overall market. So that is something that we have to keep in mind coming into market open. We want to be a little bit more patient, right? A lot of the times after these huge news events, most people are just going to be looking to buy as soon as market opens. And you want to be a little bit more cautious of that just because the IV is going to be elevated and we already had such a big push higher. So it's optimal if we wait for some sort of dip that we can go look long towards the upside. If price pushes higher right off the bat, generally speaking, you don't want to chase that initial push after already having this big gap up in the market. So for the Qs coming to market open after this huge gap up, key levels that we do have is going to be that 606. What I would like to see is a potential dip coming into market open to trade this back towards the upside. If we can get that dip back down in towards 606, that would be good for a push higher. Another possible scenario, of course, is going to be above our pre-market highs or above this 612 for continuation higher here as well. Really, if price, as I mentioned, pushes higher, right, we want to be a little bit more patient. If we can get that dip, then we're going to be looking for that dip for that continuation. Essentially, we're looking for the dip down in towards key levels, and then we're looking for the higher time frames to form this lower wick. What we want here is that lower wick, and we want to be looking for some sort of entries, right, as it comes back down in towards that 606, or we can be looking for the reclaim as it breaks back above that opening print candle. As for the QQQ, the key levels that we have coming to market open, I guess I can change the colors here now. For the NQ, levels that I have marked out here is going to be these old highs that we have marked out back from earlier in March as well. Levels we can draw out are just these old highs. Other levels that we can have marked out as well is going to be just this old pivot high. So let's actually just mark out this. As you can see, there's kind of a touch here in the pre-market, but you can mark this out, drag this one down, and then other levels we have to mark out are just basically intraday. So let's go on to the NQ. Some of the levels that we have marked out intraday is going to be this like 55.20. So we're technically right at a key level of resistance all the way back from March the 17th. So coming to market open, this is the level that we have marked out on the major indices. Or at least on the futures. Other levels that we have marked down now is going to be this 25.080. So coming to market open, as I mentioned, we already have this huge push towards the upside, well above our previous day highs. If we want to go long, we need some sort of pullback, right? We would like to see a pullback coming to market open to take this back towards the upside. So key levels that we have marked out 25.200. We could be looking for the bounce play here, or if we can dig a little bit deeper, that would be fantastic. If we can get that dip and rip back down in towards our overnight highs, which is that 25.080 for this continuation higher here as well. So this is what we have for the NQ coming to market open. And of course, we have Qs, right, dip and rip that we're looking for here as well. All right, let me go on to the SMH, which is up nicely here. We'll kind of talk about this. This one is close back up and towards our all-time highs. If you guys do have any charts or any tickers you'd like me to go over, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. Okay, let's go on to the SMH. So basically hands off on stocks during the first 15 to 20 minutes. So if the market moves higher, basically my game plan is if the markets move higher right off the bat, not really interested in trading the markets higher, at least right off the bat, just because we're going to have to be a little bit more cautious. Right, because the setup, if price pushes right off the bat, would have to be this pre-market high retest, which I'm still interested in, but I'm going to be a little bit more cautious of. If we can get that dip coming to market open, a lot more interested because we're going to have this nice pullback down in towards key levels. It's going to offer a little bit better risk to reward ratio, and we're going to have room up and towards our pre-market highs and above. So essentially, if the market dips, then I'm going to be very much well interested in taking this higher. If the market just launches higher, which is a very good possibility, then we're going to have to be a little bit more cautious because there's going to be more profit taking coming into market open. So coming into market open after this major gap up, right, there's going to be a lot of profit taking. So profit taking above your pre-market high or just for that first initial push. So that first initial push is going to be profit taking. So you don't really want to buy that first initial push when other people are taking profits. You much rather wait for that pullback. So that's when you can go long in the markets. All right, let's first talk about the SMH. So the SMH we kind of talked about on the higher time frames based off the weekly time frame. Weekly, dig deeper into this previous level of support. You can see this lower wick being put in here on the daily time frame, sorry, on the weekly time frame, and of course this week as well. We kind of talked about it. We can dig a little bit deeper, but we like to see that next push, and now we're actually back up and towards our all-time high. So you can see SMH is leading the markets higher. SPY and Qs still off your all-time highs quite a bit, but the SMH basically back at our all-time high. So that's why a lot of the semiconductors bouncing nicely here. A lot of these memory names are leading the markets back towards the upside here as well. But based off the SMH, as you can see, we are closer to our all-time highs, basically back up and towards our previous all-time highs, 420. Next level that we do have here is that 430 on the daily chart. So for the SMH, we can just kind of remove a couple key levels here now. The major level that we do have, as I mentioned, is that previous all-time highs level. And then the next level that we have is our main all-time highs level, which is that 428. So let's go into the SMH here on the lower time frames. As you can see, very much bullish, big gap up here in the markets, up about 5%. So SMH up huge here in the pre-market session, up about 5% here. Now we are above our previous all-time highs, which is that 420. So coming to market open here for the SMH, there's a very good chance we end up just kind of gravitating up and towards this all-time highs fairly soon. Doesn't mean it has to happen today. Could just kind of consolidate today and then end up gravitating there in the next couple of days. But overall, right, the next major level, of course, is going to be that all-time highs, 428 that we created all the way back from earlier February this year. As for the main levels coming to market open that we have marked out, it's just going to be this 420. So what I like to see here on the SMH is really maintain above 420. I'd like to see the dip down and towards 420, hold above this level for that continuation higher. Reclaim setup, of course, is in play for a push back towards the upside here as well. And then another scenario for the SMH, above our 422, continuation up and towards that 426. So that's what we have for the SMH coming to market open. IWM pushing nicely here as well. And now with that being said, let's go on to some tickers that we have coming into today. If you guys do have any charts or any tickers you'd like me to go over, I'm going to go over them now. I'm going to go over some tech names first, and then if we do have any time after, we'll go on to a few other tickers. So number one, let's talk about Tesla. So Tesla's the one with a lot of relative weakness, as I mentioned. We're digging a little bit deeper back inside this consolidation. Of course, we had some news here with the overall markets, kind of pushing this back towards the upside. So Tesla is the one that has been lagging behind compared to the overall markets. As you can see, we're still technically inside of this downtrend here on Tesla compared to all the other tickers that essentially kind of flip bullish here, essentially broke market structure back towards upside, besides Tesla, which ended up gravitating all the way down and towards that 340. So for Tesla coming into market open, what we're going to keep an eye out on and the levels that we're going to have marked out really is the couple levels that we broke down from earlier into the week. So Tesla reclaimed back above key levels, which happened to be that low that we created here on Monday, reclaiming back above key levels here as well. So technically, we're still bearish on the week here on Tesla underneath our Monday's highs. What I'd like to see now for Tesla is a trade up in towards that Monday's highs, 368. Key level that we have, 360. Pullback longs here are in play above our previous, sorry, not above our previous day highs, above our overnight highs. And as you can see, multiple touches here, Friday's lows here as well. So Tesla, if you're interested, look for this pullback down and towards that 360 to trade this back up in towards. Now it's going to be that 368 here, Monday's highs coming to this week. Let's keep an eye on Tesla pullback longs. As for NVIDIA, let's take a look at some of the semis here. NVIDIA, one of my favorite names along with a few other tickers as well, but really bounce off key levels of support. Next major level here on Nvidia is going to be back up and towards our range high 190 here on Nvidia. So gap up here on the daily time frame. Let's see if we can get that push up and towards the 190, which is the top of the range. So bottom of the range, now we like to see a trade back up and towards the top of the range 190. Let's go back onto the lower time frames here. As you can see, big gap up here on Nvidia coming into market open. Next major levels that we do have is really the level that we're currently at, 185. And then of course, next level is 190 and above. So for Nvidia coming into market open here, let's just kind of mark out this level, which happens to be this gap that we created. Let's draw this over and go back onto the lower time frames. So for Nvidia coming to market open, a lot of these ones, right, kind of similar game plan, right? Gapping up a lot in the pre-market. What we like to see coming to market open is any sort of dip that we can look to trade this back towards the upside. So for Nvidia coming to market open, key levels that we do have marked out is going to be this 185. Other levels that we can have marked out is just going to be based off of intraday price action. Can kind of draw this after hours high here as well, 183. So if you do want to see upside, dip down in towards that 183, bounce play off this level for continuation towards the upside. Also can be looking for the reclaim later into the session for this pushback towards the highs here as well. And then we can also keep an eye out on longs above our previous day highs, above our pre-market highs for continuation higher here as well. So this is what we have for Nvidia. Coming to market open, AMD finally breaking inside this gap. So AMD is going to be one of my main watches coming into today, breaking above our key level, which happens to be that 220, closing above, or most likely going to close above here as well. But we do have this daily gap. This was from earnings earlier in February. We want to see this earnings gap fill back up and towards that 240 here on AMD. So this is going to be one of our major levels that we can have. Oh, I already have that marked out. This is one of our major levels here on AMD, 237. Oh, yeah, 237 here on AMD coming to market open. So that's going to be the key levels that we have on the higher time frames. As for other levels, we can mark out these pre-market levels that we have drawn out, along with these after hours levels that we have as well. So for AMD, one of my main watches, as I mentioned, SMH fairly bullish. Semiconductors are leading the markets back towards the upside. What I would like to see here on AMD is one of two things. I would like to see the pullback longs for continuation back towards upside, right? Longs above our 230, or the reclaim back above that 233, or now above our pre-market highs, 233 for continuation up and towards that 237 coming into market open. So AMD, one of my main watches. We'll keep an eye out on Nvidia here as well for continuation. As for Apple, this one kind of had a nice breakout on Monday. Followed up by a pretty big rejection with some bearish news. And of course, this one now bouncing off our key level of support back towards the upside. So for Apple, the key levels that we have marked out coming to market open really is just going to be this 256. Really not too much to talk about on Apple. If you're looking at this daily chart, after the past 2 days, I'd say be a little bit more hands off on this one. Now we're back above that 256. Potential right longs back above that 256 for a push up in towards our 262, which is our Monday's highs. As for Google, let's talk about all these ones. So Google, nice bounce off key levels. As I mentioned, I like Google a lot. Reclaiming back above key areas, nice continuation back towards the upside. So we got the flip back above our 290, basically our 295. Multiple touches here. Once we got that flip, nice continuation back towards the upside. So Google, right, broke back above key levels. Now pushing back towards the upside here. Major levels that we have marked out. Let me just change the color here. Major levels that we have marked out is going to be this high that we created, which is essentially the high that we broke down from. So for Google, we are about to trade up and towards that area, 317 coming into market open. That's going to be the main level that we have marked out. Microsoft in a very good spot here as well. I talked about Microsoft being in a super solid buy area, at least based off of the weekly time frame. In this general area, 360 down towards that 350. Now I can see some buyers are stepping in. So for Microsoft, this one still is bearish. But the overall market's bouncing. I like to see Microsoft start flipping and a push back up and towards our 400 here. So for key levels on Microsoft, we are going to see that retest of essentially the area that we broke down from, which happens to be that 385. Be a little bit more cautious. We are having this gap up here on Microsoft. It very much well could fade and reject off this level and push all the way back down and towards that 370. Microsoft needs to get back above that 385, reclaim with strength for any sort of push back up and towards our 400 and above. For looking at this on the lower time frames, key level, as I mentioned, 385 is key. Meta, another one bouncing off key levels, finally reclaiming back above that 580. Now, as long as you can maintain above that 580, you like to see this flip for this push back up and towards the upside here on Meta. And then for a few other tickers, Amazon, nice little gap up here above key levels. We're actually gapping up above that 220. So Amazon looks fairly solid here as well. Let's keep an eye out on Amazon above our 220. This is our higher time frame level of resistance. We do also have another gap in the charts here as well, back up and towards our 230s. So for Amazon, moving forward here, key levels that we have marked out is going to be that 220, break above, hold above that 220 for this continued push back towards the upside. Netflix looks solid above our 100 key cycle level here as well. All right, let's go on to a few other tickers, and then we'll kind of talk about the game plan coming to market open. But as you can see, semis bouncing nicely. We kind of talked about MU. Look at this weekly time frame. Now we like to see this trade back up in towards really this 450, but nice gap up here on MU. Next level is technically back up and towards that 450 here on the higher time frames. But base above our key levels yesterday, we talked about MU flip above that 370. Nice buyer stepped in here for that continuation higher. Next levels that we do have marked out is going to be that earnings low. Earnings day low that we can have marked out. Drag this over. Currently, as you can see, MU is kind of right at this 420. So 420 is a key level of resistance here on MU. Other levels that we can have marked out is going to be that 409. If you're interested in MU, base above this 404, continuation back up and towards that 424. SNDK, this one's back up at your all-time highs. Nice base above our 700 key cycle level that we talked about. So SNDK, nice bounce or nice buyer stepped in here off that 680. And now this one is actually back up and towards our all-time highs. Kind of mark out this. As for SNDK, I'll be a little bit more cautious. Expect some sellers to kind of step in coming to market open or some profit taking. If you are interested in SNDK, it's going to have to be some sort of dip and rip or the reclaim back above our previous all-time highs, 780. Intel, a couple of you guys are mentioning Intel here. Yeah, Intel, I kind of talked about that push up and towards our our yearly highs here. Intel looked super solid on the weekly time frame. Perfect retest, really strong weekly candle close last week. Next levels that we did have was our 55, our yearly highs here on Intel in the overnight session, if I'm not mistaken. So yeah, Intel key levels that we have marked out here is our yearly highs. And kind of drag this down. So yearly highs that we have marked out, we can kind of drag it down in towards this key level that we have marked out. And now for Intel, we are making a brand new high for the year. Key levels that we have marked out on Intel is going to be this 55 key psych. If you are looking at this, let's go back onto the weekly perspective. We are making a brand new high for the year. So Intel is very strong. To me, Intel is going to have this push up and towards our all-time high. So we ended up having this nice push earlier into the year. Kind of consolidation. We're building up these higher lows. Now we're having this breakout once again. Intel is most likely going to push up in towards, of course, our all-time highs here, which is that 60 key cycle level. So Intel is very bullish, breaking above our key levels, reclaiming back above. Next level is going to be our all-time highs here, which was our high back from 2021. So for Intel, at least the key levels that we have marked out, 56, of course, we can mark out our all-time highs all the way back from 2021. And really, this is the next major level here on the daily chart. So for Intel, if we're looking at this from a daily perspective, next level, as I mentioned, is going to be that previous all-time highs. After having this nice base, we could see one of two scenarios for Intel. If we can maintain now above our previous, our high that we created for this year, base above this level and consolidate, right, we can see this next leg up in towards our all-time highs here, 62 on the higher time frames. So keep an eye out on Intel moving forward. Right now, of course, after hitting our yearly highs, going to be a little bit more difficult without some sort of consolidation. But Intel, as I mentioned, next major level is going to be that 62 here on the higher time frames. At least coming to market open, keep an eye out on our previous high that we created, 55. Maintain above that 55, push up in towards our pre-market highs here and above. Other names that are pushing higher, WDC, memory name pushing up. This one is making a brand new high for the year. And a couple other names pushing up nicely here as well. So a lot of names moving up nicely here. Even Hood finally seeing a nice bounce. It's only up 8%, but pretty big drop. The names that are, of course, leading the markets higher are memory names along with semiconductors. So you really want to be focusing on specifically names that are the strongest. So names that bounced either before the overall markets bounced or names that are showing a little bit more relative strength. These are the names that you want to focus in on the upside. So for something like Tesla, right, you don't really want to focus too much. Tesla has been a great trade towards the downside just because of the relative weakness. So now with the markets bouncing, Tesla's not something you want to put too much emphasis on unless it has extreme relative strength intraday, since it doesn't have any higher time frame trades, right? The next higher time frame trade would be the break above this trend line. It would have to reclaim back above key levels. But as for my main watches coming to market open, what I'm going to keep an eye out on and what my game plan is, as I mentioned, is going to be looking for some sort of dip and rip on the overall indices for this trade back towards the upside. Main watches, NVIDIA dip and rip off this 183. AMD I like the best for this full gap fill back towards the upside. So keep an eye out on AMD, any sort of pullback today, or of course longs above that 233 for continuation higher. Tesla, still interested, even though this one is weaker on the higher time frames, offer 360 if buyers can step in for continuation higher. And then for other tickers, right, really it's just the semiconductors I like the best, right? NVIDIA, AMD looks super solid. Tesla off that 360. Google looks fairly solid as well. I don't really have too many levels on Google, but Google gapping up. Really now, what I like to see, at least on the weekly time frame for Google, is eventually that push back up in towards that all-time highs. Microsoft, a little bit weaker on the higher time frame, so this one just kind of bouncing mean reversion. And then, of course, I do like Amazon here as well, above our 220. Another name that looks good here is Netflix. This one, if we can get that reclaim back above our 100 key psych, we can be looking for that trade back towards the upside today here as well. You can see on Monday, a little bit of rejection right off the bat. Tuesday, holding underneath. Reclaiming back above here on Netflix, not really popping with the overall markets, but the hold above our 100 key psych, we can see this push back up and towards our 103. But main names, right, keep an eye out on AMD along with NVIDIA, and then Tesla offer 360. And then other names that we can keep an eye out for are some memory names, right? MU above our 404. SNDK looks super solid. This one is at our all-time highs, but above our all-time highs, we can see this push up in towards our 790 and 800 here on SNDK. And then Intel looks super solid here as well, above our 55, which was our high that we created earlier this year. Base above that, we can be looking for continuation here on Intel as well. So focusing in on the semiconductors along with some memory today. As for the overall markets, as I mentioned, be a little bit more cautious if the market does want to rip higher right off the bat. We do have to find some sort of kind of low risk entry coming into market open. So preferably we do get some sort of pullback that we can go look long. Besides that, that is going to be it for me today. We'll keep you guys updated if there is any more new developing information that we do have, but there is a decent amount of higher time frames setting up here, especially names that are at all-time highs with, of course, memory and some select semiconductors. But yeah, that is going to be it for me today. I'm going to get ready for market open here now. Yeah, it's already 8:50. If you guys come back, we'll have plenty of more time in the following days for to go over a few other tickers. But yeah, that's going to be it for me today, and I will see you guys all tomorrow. All right, take care, everyone. Peace.